Hello, everyone. Welcome to the 2024 Tax Law Update course for volunteers of TaxAid. Thank you again so much for joining us. My name is Andy Chang. I've been a TaxAid site manager for almost 20 years now, and I really enjoyed my time volunteering CPA in my day-to-day life. Just been in the tax world for just as long as I volunteer at TaxAid. Thank you guys again for volunteering, for new and experienced volunteers. Our clients really appreciate what we do. Well, I appreciate what you do. I'm sure everyone at TaxAid super appreciates what you do, what you guys do, and we are looking forward to another great season with our clients and our volunteers. We couldn't do it without you guys. Okay, so before we start, a couple of housekeeping items. Nothing in this training replaces or supplants the requirements of the tax code. This summary is intended to be just a summary and not actual tax advice that a taxpayer would receive. It is good for many basic cases. Many of our clients fit that mold, but if there are any nuanced issues, the summary presentation is not going to be comprehensive enough to cover and substitute as actual tax advice. Of course, additional information about tax law can be found on the IRS's website at irs.gov. Okay. Our agenda for today, we're going to talk about what's new for tax year 2023, talk about changes to common tax topics that we typically see with our client base, talk about provisions that were extended, and also talk about provisions that have sunset tax year 2023. All right, what's new in 2023? Tax deadline is April 15th, 2024. No weekends or Emancipation Day this year to extend that past April 15th. The income tax limit for tax credit is now $64,000, and that's also where we're setting the threshold for or the income limit for our clients. Just make sure your intake folks are aware of the $64,000 limit as they screen clients as they come in. There are form changes, of course. Every year there are form changes, and then no economic stimulus this year that we saw prior years. The mileage rates for self-employed individuals that use their vehicle in business is 65 cents per mile, 65.5 cents per mile, and then 22 cents for medical deduction, and then 14 cents for charitable deduction. The latter two, of course, are taken on the Schedule A for itemized deductions. Standard deduction amounts have now increased to 27.7 for married filing joint, 13.8 for a single head household is 20.8, 20,800. Also, for folks that are over 65, there's some additive amounts on top of the base deduction. Okay. For 2023, again, dependent exemptions, personal exemptions are still suspended, but we'll talk about the child tax credit a little bit later. If a taxpayer is claiming qualified relative as a dependent, the gross income limitation is $4,700. So a qualifying relative cannot have more than $4,700 of gross income. Changes to the child tax credit. The child cannot have attained age 17 by the end of 2023, and then the amounts, the refundable portion is, well, the non-refundable portion is $2,000 per qualifying child. $1,600 additional is the additional child tax credit, and that amount is refundable. So maximum credit for qualifying children under the child tax credit, and additional child tax credit is $3,600. Okay. For the top of the line or the above the line deduction for educator expenses, that is now increased to $300. It used to be $250. And then supplies used to prevent the spread of COVID-19, that also qualifies as a unreimbursed educator expenses. So this is for the teachers that come. Okay. Let's talk a little bit about the 1099-K. Just as a little bit of background, the 1099-K is a form that third-party settlement organizations such as Venmo and PayPal, those are the big two that we typically see. For folks who are transacting online, for example, using Venmo or PayPal, those organizations will eventually be required to report amounts that go through their system in excess of $600. However, in November 2023, the IRS decided to increase those thresholds to $20,000, and they must and the individual must have more than 200 transactions. So, hopefully that means we won't see a whole lot of these 1099-Ks for 2023. And then just as FYI, for tax year 2024, that limit drops down to $5,000. And the presumption is that after that, they will go back to, they will finally phase in the intended threshold amount of $600. Talk a little bit about the earned income tax credit. The earned income tax credit has a limit on the amount of investment income the taxpayer can have. Last year it was $10,300. In 2020, tax year 2023, that limit has now increased to $11,000. And then for folks who are in-home supportive service, who do in-home supportive services or IHSS, those workers, the income is generally tax exempt. However, that income does give them earned income for purposes of computing the earned income credit. So this is very taxpayer friendly for our clients that have IHSS income. Okay, and then the threshold for the earned income, the AGI limits. You can see here for folks who have 3 or more qualifying children, and that limit is just shy of $64,000. It tapers down with fewer qualifying children. And this is also why TaxAid set the income limit for clients at $64,000 for the year. And then the maximum amount of earned income credit that you'll see on a taxpayer's 1040, 7,400 is the top, the maximum credit. But that, for taxpayers that qualify, that earn the that can claim the earned income tax credit, you can see it's a significant amount of money. Okay. The California FTB has now included a new refundable credit for families that go through the foster youth system. It's a refundable credit of $1,117, and that doubles if you have if both taxpayer and spouse are qualifying are eligible parties through the foster youth system. So if any of your clients are part of the foster youth system, they may qualify for additional earned income credit under California law, and it is a refundable credit. And talk about other various new provisions. Just going to throw them all on the screen first and talk about each one. So the first few pertain to the 10% early withdrawal for folks who are pulling funds out of their deferred retirement accounts, such as 401ks. there is now a 10%, an exemption from the 10% early withdrawal penalty for distributions made to public service employees or folks who are terminally ill. Along the same lines, certain corrective distributions and or repayments of qualified birth or adoption distributions. Those amounts, if your client pulled out funds from their deferred retirement accounts, they are no longer subject to the 10% early withdrawal. However, those amounts are still subject to general income tax because they're still deferred retirement accounts. For the required minimum distributions, or RMD, those rules have now changed. So individuals that reach age 73 are now required to start pulling funds from their retirement accounts, deferred retirement accounts. There is a transition rule in place though for 2023. This is for individuals that are 72, that reach 72 after tax year 2022. They may delay taking out their RMDs until April 1st of the year following the year which they turn 73. I believe in this case, this means someone who reaches the age of 72 in 2023, they will have until April 1st of 2024 to start pulling the RMD. And then for folks who don't pull, who are required to pull RMD but don't pull enough out, there used to be an excise tax of 50% that is now decreased to 25% for tax year 2023. And then there is, due to the Inflation Reduction Act, there is a new energy efficient home credit. That credit is 30%. Up to total of $3,200. These would be home improvement expenses for expenses such as new windows or heat pump. Those are typical examples of home energy efficient home improvements. Again, this is a very special case for clients that own their own home and have made home energy efficient upgrades. Please reach out to site managers or do a little research online to see if those expenses qualify for the new energy efficient home improvement. Okay. And then finally, for public safety officers who were excluding insurance premiums from their gross income, those plans are no longer required to pay the insurance premiums directly. Again, very special edge case. If you see something like this, please reach out to the site manager. Let's talk a little bit about provisions that have sunset for 2023. I believe there's only one of these, and that is the meals and entertainment. Also, in 2022, there was a temporary 100% deduction for food expenses for the folks that are self-employed. That has now completely sunset and is back to the statutory limit of 50% deduction amount for food and beverages. Okay, and that concludes our training for this year for tax updates for tax year 2023. Thank you everyone again for the time and attention. If you have any questions, please feel free to email TaxAid or visit our website. But again, thank you again for volunteering this year, and I hope to see you guys out there. Thank you so much.